I tested this purple cloud indicator strategy and it gave a win rate of 60% whilst having a risk to reward ratio of 1 to 2. So the results are pretty good.
Hey, that's pretty good.
So if we take a look here, we can see wins. We got a few small losses, but the main thing is the losses are a lot smaller than the wins. So this is definitely a winning strategy to test out. In this video, we'll be back testing this strategy together. We'll get an understanding of why this strategy works. We'll take a look at which trades to take, but more importantly, which trades to ignore when using this strategy. And then if you feel like this is a strategy for you, you like it, you can see yourself using it in the future, at the end of this video, I'll show you all the settings you need to input to your indicators to get this strategy working for you. For this strategy, there's 3 indicators we'll be using. The first is the purple cloud indicator. The second is an EMA difference histogram and stochastic indicator. And the third is a smooth moving average. And we'll be placing all trades on a 15-minute time frame. Now, there's 3 conditions we'll be looking for on whether we're placing a buy or a sell. So for buys, the first thing we're looking for is the price has to be above the smooth moving average. And then we're looking for the B signal, which indicates a buy. And then the third and last thing we're looking for is the histogram to be green. And for sells, it's the complete opposite. So price has to be below the smooth moving average, which is this white line here. There has to be a sell signal, and then there also has to be red on this histogram. So this one wouldn't work out because that one's green, but if that was right there, it would allow us to go in. Now, in terms of setting up the trades, if we take this one here as an example, this buy signal, we'll be placing the trade as soon as the 15-minute candle closes. And then we'll be setting the stop loss below the recent swing low. Now, I don't like to set it on the recent swing low because volatility. I like to set it just below, and then risk to reward 1 to 2. And there you go. Now I'm going to go back 2 months from today so we get a good sample size to test. So the first thing we're looking for with this strategy is whether price is below the smooth moving average, which is this white line, or whether price is above it. So as you can see right now, price is currently below the smooth moving average. So all of these buy signals, we're going to be ignoring. We're not going to be taking them. Now, the second thing we're looking for is when we get a sell signal, is the histogram also red? So this one isn't. So this is, again, another trade we would have ignored. The next one we have, which actually would allow us to take a trade, is this one. Reason being, it's a sell signal which is below the smooth moving average, and this histogram is also red. So if we take a look closer at this trade, we would have entered this trade when that 15-minute candle closed. So it closed right there, and that's when we entered. So initially, we had a little bit of drawdown, but eventually price came down and it hit our target and resulted in 111 pips. Now, if we go again, that one we would have ignored. This one I probably would have ignored just because it's on the smooth moving average. But secondly, we would have ignored it because the histogram is green. This one would have ignored because it's below the smooth moving average. So here we got a sell that's below the smooth moving average. Histogram is also red. Perfect. However, we've taken this trade. Unfortunately, it did hit our stop loss. But the beauty is our losses are half the size of our wins because we got a 1 to 2 ratio. So these ones we would have ignored. This is green. This one below the smooth moving average. This one we would have taken. Placed our trade when the candle closed. See, we follow it down and resulted in 158 pips as a win. This buy signal, again, we would have ignored. This sell signal, perfect. Histogram's red, it's below the smooth moving average. And if we go along, we can see tiny bit of drawdown at times. We was in the trade for quite a while as well, but it resulted in 177 pips win. This, ignore, 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 ignore. This one we would have taken. Unfortunately, did end up in a loss, but how many pips was it? Only 72. This next one, again, unfortunately, 2 losses back to back. Now, this price is finally broke above the smooth moving average, but this is red. We wouldn't have taken that one. Next time we can place a trade is this one. Above the smooth moving average, green, resulted in 114 pips. So if we're only looking for buys above the smooth moving average, this one we wouldn't have taken. This one we wouldn't have taken. This one's below. Here we are. Above the smooth moving average, green, resulted in 231 pips.
Nice.
Here, 78 pips. This one did result in 39 pips as a loss. This one we wouldn't have taken because the histogram's red. Same thing here. This one, even though it was a loss, it's a trade we would have taken because this is green. It's above the smooth moving average. Here, we're looking for sells now because price is below the smooth moving average. Resulted in 102 pips as a win. Next trade, 89 pips as a win. We did have one loss here. This one was a very short trade. We was out within maybe 4 candles. 50 pips loss. Win. 72 pips as a loss. 70 pips win. You get the idea. And now we run out of time because this is the current date. We come down and we take a look at the results now. To make it easier, I've already calculated it all. It results in a 1,018 pip profit.
Oh my God! Wow!
And again, this risk to reward is amazing because it's 1 to 2. So all the losses that we had, even though it's got a win rate of 60%, is half the size of the wins. So in terms of the settings for this strategy now, if we start at the purple cloud, so in terms of the style, make sure you've got everything checked the same, everything's the same color. This way it's going to be easy to follow the video. In terms of the inputs, period is 21, alpha is 1. Now in terms of the smooth moving average, input for the length is 145. Now for the line, I like it to be a strong white color, a little bit thick as well so it's easy to see. And in terms of the EMA, you'll notice that when you first input the EMA to your trading view, these green colors will be slightly different and the red colors will be slightly different. I like to make them the same color so it's just easier, and I uncheck these as well. We don't need them. In terms of inputs, this is what you're gonna have. EMA 1 is 7, EMA 2 is 45, K smooth is 7, D smooth is 5, and the stochastic length is 14. And that's it. You now got all the inputs. You've seen how the strategy works, what to do, what to avoid. So this works really well on gold. It'd be really interesting to see your perspective on it, how you found it, and also if you do trade other currencies, how it worked on other currencies. So let me know in the comments below, but I hope you enjoyed the video.